Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, November 30th, 2016. So, the last trading day of November, had some mixed markets, but overall, the it's this is kind of one of the reasons why I say sentiment is so important is because the majority is always going to be wrong, and it's something that you really have to understand. And I think a perfect example is the majority were pretty much banking on Hillary Clinton winning the election, and the majority were thinking that if Donald Trump won, that the stock market was going to crash. Well, we saw a huge, say, overbalance or not balanced sentiment with Hillary. She had at one point I saw an 85% chance of winning, and she lost. And from there, instead of the market crashing like many were saying it was, we've had one of the strongest broad-based rallies we've seen in years. And it's, again, the majority is going to be wrong, and that's what you have to understand. And the same thing goes with the stock market. Is when the majority is looking one way, it's not the time to jump on the bandwagon and start looking on the long side or the short side. If there's extreme bullish sentiment readings, like we're seeing now, which I'll show you in this video, it's not the time to jump on and say, okay, I'm just going to go long because everybody on the financial media is telling me that we're going higher. It's the times that you want to start tightening up on your stops and when you want to either start building a short position. And vice versa when it's heading down. So one of the things, I did the webinar yesterday, and some of the people are on this, and this is the same chart I showed you, but this is going all the way back to June 2016. And this is our breakout line here, and this is, say, what technical people would use. And it found support, but again, going from June 7th, 2016 to September 14th, you were dead even. You made nothing. Going to October, you made nothing. You're even. Going back to into the 11/7, you're back to even again. So you basically went 5 months making nothing. And when it broke down here, most people, because it's a technical breakdown, got short, and this is when we had overly bearish sentiment readings, and from there we had a massive run. So if you're not anticipating these turns, they're leaving you, and you're not having time to react. That's why you want to know where sentiment is at all times, and you also want to know when these technical turn dates are coming. So we're not going to, the thing is that we're not going to be 100% correct on these turn dates. No one's going to be 100% correct. But when we're able to combine them with, sentiment, our technical turn dates, and then regular technical analysis, we're correct a lot more than most other services out there. So the normal, what we really do with this is we take the investor sentiment. That gives us kind of the gauge on what is how everyone's feeling about the market. And like I said, if everyone's bullish on the market and it stays up there, and we're running into a technical turn date that's going to be on the downside, we then take a look at how the regular technicals are looking, and if we have bearish divergences, you're going to start looking for where to short. So it's a three-pronged type trading style that we use on it, and like I said, it works really well. So let's take a look. These are our latest sentiment readings, and as you can see, we're having a plethora of bullish sentiment readings. So a high sentiment reading does not mean you short right here. We know when the expected top date is, but this is now confirming that when that top date comes, we're probably going to get a pretty good move to the downside, so we're going to be prepared for it. But again, you have to know when the top date is. Anybody who's been shorting this rally from here has been really in tears because it's been kind of nonstop on the upside. So if you sat there and now all of a sudden we're getting these extreme bullish readings, and when the top is supposed to be expected, now the time part of it, and you can start adjusting your portfolio. So here's an intermediate term sentiment data, and you can see we're getting pretty extreme bullish sentiment readings there as well. And then this is just a longer term, and you can see this is when everybody was, if Trump won, we're going to be crashing. Well, sentiment was at extreme lows, and from there, it's moved up from here up to these levels here. But my point is, when everybody's looking one way, it very rarely will go in that direction. So we know when the turn date is. Like I said, I'm not going to give it to you here. But it's coming, and we know that we have the high sentiment readings that are in place. So let's take a look at the regular technicals here, and what we see is, hang on one second, I just want to try to move this over. Okay, there we go. So what we're looking at, this is just a short-term chart of it, and you can see we have bearish divergences in place. We broke through the channel and some support levels as 2183 down to the 2164. Now, is it going to go down to these levels right now? I wouldn't bank on it because we're not at the expected turn date. We could have a dip and then back up and then back down again. But once we get to that expected turn date, that's when you're going to be able to take a decent short position. And like I said, we're probably going to have anywhere from a 40 to a 70 point drop. And those are the types of trades that we look for at Sentiment Timing. We're not looking for the trades that you're in and out. We're looking for the big ones. So this is the 15-minute chart. Like I said, a push down to the 2183 would make sense. Not really that far below it, but we haven't really had that kind of a drop since the rally started. If that holds, most likely we're going to have a move to the upside because, like I said, we know when the turn date is coming, and we're probably going to chop around. Now, this is you can see we have support at the 2197 on the S&P. We're right there. They might break it to try to suck in some people on the short side or something. 2192, 2187. These are your support levels here. So if it comes down and hold, don't be surprised to see another push back up to these levels here. And things may go really fast where we have 15, 20, 25 point moves in the S&P. So keep an eye on those for support. And then once the turn date does come in, this is a bearish rising wedge that I've been showing. And I said it's very it found support at the 200-day moving average, came out, and it's very common for the S&P to come up and retest the top of this, the bearish wedge. So once we have the expected top date to come in, there's a shot that we could get a much deeper decline. Now, again, in the stock bond ratio report that Woody put out, it actually gives you a pretty good little long term view of what he sees playing out. Now, the special that we have is in the email, but what we're going to be doing is the special is going to be $99.99 for 2 months. And then after that is $159.99, $149.99. But what we're giving you is the stock bond report. You're going to get that included when you subscribe. And we're also going to give you the gold report that he put out last week. So these are two separate reports that typically are $39.99 a piece. They're free, so that's $80. The typical our monthly rate is $149.99, so you're getting $100 instead of $300, so you're saving $200 on that. And I'm also giving the free subscription to Markets Path. So as long as you remain a member of Sentiment Timing, you will have a free membership to Markets Path. I do the video reports like this each night. We do morning notes, and we also have a trade room. That is, we typically charge, I charge $69.99, so that's an $840 value. So we're giving away a lot right now. We want you to, people to be here till the end of the year because there's going to be some huge moves that are going to be playing out. And there's really nobody that you want guiding you through this market except one of the best market timers in the world that's been doing this over 40 years, and that's Woody Dorsey. And with that, until next week, have a great night, and I will talk to you guys next week.